Take a bill from your wallet. Look at it. That's not an asset. That's a debt instrument. On every US dollar bill, there's a small line of text. Federal Reserve Note. Not certificate. Not treasury note, but note, a debt instrument. That's a legal admission. The money in your hand is someone's debt. But whose debt? And created by whom? Before we go deeper, tell me in the comments, where are you watching from? And what time is it right now? I want to know how far this story about financial power has reached. And if you want to truly understand how the monetary system works, make sure to subscribe, because what you're about to hear will completely change how you see money. Most people believe governments create money. Wrong. They think central banks print money and distribute it. Wrong again. The truth is, 97% of money in the world is created by private commercial banks, not governments, not central banks, but the banks where you and I deposit money every day. This isn't conspiracy theory. This is mainstream mechanism documented in economics textbooks, acknowledged by the Bank of England, confirmed by the Fed. But if commercial banks create 97% of money, who controls them? If you think it's the government, you're only seeing the tip of the iceberg. Because beneath the surface, there's a network of power few people know about. A system designed to operate beyond the reach of ordinary law. And today, we're going to peel back every layer. Let's start with a simple question. Who owns the Federal Reserve? According to the Fed's official website, they say, the Federal Reserve System is not owned by anyone. But here's the truth documented in the Federal Reserve Act of 1913. Member banks, private banks, must purchase shares in their regional Federal Reserve Bank. They receive a 6% dividend annually. They elect some of the directors of the Reserve Bank's board. So what does not owned by anyone mean? It means these shares cannot be sold, cannot be traded, cannot be used as collateral. But the shareholders are still private banks. This is sophisticated design, an entity independent within the government. Not independent from government, but independent within government. The Board of Governors is appointed by the President and confirmed by the Senate. But the Fed doesn't receive budget from Congress. Monetary policy decisions don't require approval from the President or anyone in the executive branch. So who really controls? The answer, a hybrid structure. A compromise design born from the power struggle of 1913. According to Donald Cohn, former vice chairman of the Fed, the agrarian and progressive interests, led by William Jennings Bryan, favored a central bank under public, rather than banker, control. However, the vast majority of the nation's bankers, concerned about government intervention in the banking business, opposed a central bank structure directed by political appointees. The legislation that Congress finally adopted in 1913 reflected an intense political battle to balance these two competing views and created the hybrid public-private, centralized-decentralized structure that we have today. This wasn't a compromise for the public good. This was a compromise between power factions. But the Federal Reserve is just one piece of the puzzle. Now, let's talk about an organization that 99% of people have never heard of. The Bank for International Settlements, BIS. BIS was established in 1930, initially to oversee German war reparations payments after World War I. The original goal was to promote cooperation among central banks and to provide additional facilities for international financial operations. Sounds boring, right? But here's what makes it interesting. BIS has de facto international legal personality, is exempt from Swiss taxation and banking oversight, and its senior management enjoys diplomatic status. According to the Brussels Protocol of 1936, the bank, its property and assets, and all deposits and other funds entrusted to it shall be immune in time of peace and in time of war from any measure such as expropriation, requisition, seizure, or confiscation. Read that sentence again. In time of peace and in time of war. BIS and its staff are exempt from Swiss taxation. Moreover, BIS assets are immune from all jurisdiction under Swiss law, meaning they cannot be seized. Let me be clear. A financial institution located in Basel, Switzerland, that no government can investigate, cannot be sued, cannot have its assets seized. And what does this organization do? BIS hosts regular meetings of central bank governors. It develops international standards through the Basel Committee on Banking Supervision, creating Basel I-2-3 capital regulations for global banking. This isn't suggestion. When BIS issues standards, banks worldwide must comply. Who sits in those meetings? The Fed chairman, the ECB president, the governor of the Bank of England, the governor of the Bank of Japan, the largest central banks in the world. They meet every 2 months. No reporters, no public minutes, only outcomes. This is where global monetary policy is coordinated. Not in Washington, not in Brussels, but in Basel. Now, let's talk about how money is actually created. When you deposit $100 into a bank, you think that $100 sits quietly in a vault. It doesn't. The bank only needs to keep a small fraction, called the reserve requirement. In the US before 2020, this number was 10%. Since March 2020, the Fed reduced it to 0%. That's right, no reserve requirement. But let's use the 10% example to understand the mechanism. Step 1. You deposit $100 into Bank A. Step 2. Bank A keeps $10, lends $90 to Person B. Step 3. Person B buys something. The seller deposits $90 into Bank B. Step 4. Bank B keeps $9, lends $81 to Person C. Step 5. The cycle continues. Final result. From the initial $100, the system creates nearly $1,000 in circulation. This is called the money multiplier effect. But here's the key point, that $900 didn't exist before. It was created from debt. Every loan is new money. When a bank lends you $100,000 to buy a house, they don't take money from a vault. They type into a computer and $100,000 appears in your account. That's the magic of fractional reserve banking. That's the magic of fractional reserve banking. The Bank of England publicly confirmed this in a 2014 report. In the modern economy, most money takes the form of bank deposits. But how those bank deposits are created is often misunderstood. The principal way is through commercial banks making loans. Whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money. What does this mean? It means the money supply is not controlled by government. It's controlled by credit demand. The more people borrow, the more money is created. But here's the problem. When people repay debt, money disappears. Because that money was born from debt, and when debt is canceled, money is canceled too. So how does this system survive? By ensuring that debt always grows faster than the ability to repay. This isn't a bug. This is design. A system where growth depends on new debt isn't sustainable. It's a Ponzi structure. The only difference? It's legal and protected by law. Now you understand why global debt has reached $315 trillion to 3.5 times world GDP. Because if debt stops growing, the system collapses. But why did the US dollar become the global reserve currency? The answer lies in a secret agreement from 1974, little known, but shaping the entire modern financial world. After Nixon ended the gold standard in 1971, the US dollar was no longer backed by gold. It became pure fiat currency. The problem, if the dollar isn't backed by anything, why should other countries accept it? The solution, the Petrodollar Agreement. In 1974, the U.S. reached an agreement with Saudi Arabia. Saudi would sell oil only in US dollars. Saudi would reinvest oil profits in used treasury bonds in return. The US would provide military protection for Saudi Arabia. This agreement was later expanded to all of OPEC. The result? Every country wanting to buy oil must have US dollars. This is why the dollar became the global reserve currency. Not because it's strong, but because you cannot buy energy without it. This is ultimate power, controlling the currency the world is forced to use. But what happens when a country tries to break this system? Let's look at the timeline. Clearly documented events. Year 2000. Iraq announced it would switch to selling oil in euros instead of USD. Year 2003. The US invaded Iraq. Year 2009. Libya's Muammar Gaddafi proposed creating a gold dinar for Africa, so African nations could sell oil in gold instead of USD. Year 2011. NATO intervened in Libya. Gaddafi was overthrown and killed. Year 2017. Venezuela launched the Petro, a cryptocurrency to sell oil without using dollars. Year 2018 present. The US imposed heavy sanctions on Venezuela. I'm not saying these events have direct causal relationships. I'm just presenting the timeline, a verifiable timeline. You draw your own conclusions. But here's what's undeniable. Any country that challenges the petrodollar system faces severe consequences. Now that system is being challenged again. BRICS Brazil, Russia, India, China, South Africa, plus over 40 other countries are developing their own payment system, independent of the dollar. Saudi Arabia, the 50-year partner, has started accepting payment in Chinese yuan for oil. The petrodollar system is eroding, and when it collapses, global financial power will be redistributed. So after everything we've discussed, who really controls money? Let's look at the power structure. Tier 1. The Cantillon effect. This is an 18th century economic concept. Those who access new money first benefit most. When the Fed prints money, it doesn't reach you first. It reaches banks first, large corporations first, financial markets first. They buy assets with this new money before prices rise. By the time money reaches ordinary workers, prices have already increased. Tier 2. Major commercial banks: JP Morgan Chase, Bank of America, Citigroup, Goldman Sachs, HSBC. These banks are shareholders of Federal Reserve banks. They elect some board members. They're also the first to benefit from cheap credit. Tier 3. The central banks cartel: the Fed, ECB, Bank of Japan, Bank of England, and over 60 other central banks that are members of BIS. They meet regularly in Basel. They coordinate policy. They set global standards. Tier 4. The architects, those who designed the system originally. The families and financial institutions that have existed through centuries, through multiple crises, and still stand behind the scenes. I don't mention names because there isn't sufficient public documentation. But real power never needs fame. So what do? You can't win in a game where the rules are written for others, but you can play differently. 1. Diversify beyond a single system. Don't keep 100% of assets in one bank, one currency, one country. 2. Understand monetary cycles. Inflation, deflation, credit expansion, credit tightening. These cycles repeat. Learn to read them. 3. Hold assets that cannot be printed: gold, silver, land, skills. Things with intrinsic value, not dependent on belief. 4. Learn the rules of the game. Monetary policy determines everything. If you understand policy, you're always one step ahead of markets. Because the question isn't who controls money. The real question is, are you letting money control you? If you want to understand more deeply how the financial system really works, the hidden corners that textbooks don't teach, and how to protect yourself in a system designed for you to lose, Subscribe to this channel now. This isn't a place for get-rich-quick advice. This is where we expose the truth about global financial power. Subscribe so you don't miss deep analyses like this. If this video changed how you see money, leave your thoughts below. Do you believe this system can change? Or has it been designed to exist forever? Your perspective matters. Because the truth about money is the truth about power. And power is never given. It must be understood. See you in the next one.